Hey, what's going on YouTube? It's your boy the Stock Dude, back with another hot video. Now, if this happens to be the first time that you are tuning into my channel, first of all, I want to welcome you and thank you for stopping by. Secondly, I want to ask that you please hit that subscribe button and turn on your notification bell. That way, if you like what you hear, the next video that comes out, you'll be sent an alert and you won't miss a thing. Like I always say, I am not a stock expert, nor do I play one on YouTube. Anything you hear on this channel or any other channel, make sure that you take it with a grain of salt. Do your own due diligence and do your own research before you put any of your hard-earned money at risk. Back in, I believe it was February of last year, one of the first videos that I made, the early part of 2019, when I first opened up the channel, one of the first videos that I made, I asked a simple question. And that question was, would you be interested in investing in real estate if you did not have to be a landlord? I say again, think about it. Would you want to be invested in real estate if you did not have to be a landlord and you did not have to deal with the toilet stopped up and something wrong with the door, the refrigerator, the AC unit, all them problems, man? A lot of people want to be invested in real estate, but they don't want all of the problems, all them phone calls coming with it. I am a landlord, and I don't really want to be a landlord. It's a lot of headache. But if I could show you 3 ways, 3 different companies that will allow you to have the benefit of being invested in real estate, and by the way, it is a great time to be invested in real estate because it's on the way back up, it's on the rise. But I got 3 companies that'll allow you to do that. And check this out. Not only will these 3 companies allow you to be invested in real estate, but they will pay you a dividend, free money, just to own their stock. If you think that's something that you would like, do me a favor. Leave me a comment on the bottom of this page and let me know which one of the 3 companies that you like. Matter of fact, if it's one of those companies that you like that is not on this list of 3 that I have, leave your boy the Stock Dude a comment on the bottom, because just like the Temptations, I ain't too proud to beg. I'll do my own due diligence and my own research on a company that you possibly could suggest to me. Without further ado, follow me as you always do, and I'm going to show you the first company, and it goes by the name of Arbor Realty Trust Incorporated. Now, anybody that knows me knows that I am a big fan of Arbor Realty Trust because this is a solid company and it pays a solid dividend. Now, for those that don't know, I'm going to go to one of my websites that I use, Yahoo Finance, and I'm going to read a little bit of the description to tell you a little bit about what Arbor Realty Trust Incorporated is all about. Right here in the description, it says that Arbor Realty Trust Incorporated invests in a diversified portfolio of structured finance assets in the multifamily, single-family, rental, and commercial real estate markets. Now, they're located in Uniondale, New York, established in 2003. Now, Arbor Realty Trust is what's known as a REIT. That's R-E-I-T. And REIT stands for those that don't know, Real Estate Investment Trust. Now, why I like real estate investment trusts is because they are mandated by the government to give you as an investor, me as an investor, 90% of their total revenue each year. Now, I'm going to say that again. As a company, in order to be qualified as a REIT, real estate investment trust, a company must agree to give their shareholders, that's you, that's me, they must agree to pay to their shareholders 90% of what they own in a year. Now, simply put, Arbor Realty, they loan money to real estate investors, who in turn go out and purchase multi and single family homes. They also provide loan financing for businesses also. They're like a hard money lender. But what makes this different is this hard money lender company who loans money to real estate investors, they pay you. Is that right? I'm looking at my notes. Is this right? They pay you for owning shares of stock in their company, Arbor Realty Trust. They pay you 10.4% annual dividend. Let me say that again. Arbor Realty Trust pays you 10.4% annual dividend. Now, just for those, just to get an idea of what that means, I'm going to go to another website that I use called the Dividend Channel. Now, the Dividend Channel, what this website does is it gives you the payout history. You put in your ticker symbol right here, which I've already done, but you put in whatever ticker symbol you want of whatever dividend company you want to find information on. Hit enter, and it'll give you a payout history. Now, I'm going to go down to the bottom right here. Starting in July, as you see, of 2004, Arbor Realty was paying 35 cents per share dividend. They pay quarterly, which is every 3 months. Look at these numbers. Now look at them very carefully. They started out paying 35 cents. It went to 43 cents, went to 47 cents, went to 55 cents. Now you fast forward all the way from 2004 all the way up to August of this year, 2020. Their last payment was 31 cents per share. So it started at 35 back in 2004, and due to things that happen in the market, prices go up, prices go down. But one thing that I see is that their dividend payment has been paid. They've been paying it. Hadn't done a lot of missing. So right now they're paying 31 cents per share. Now, just to give you an idea, let us say that you own 1,000 shares of Arbor Realty. Get my trusty calculator, and they're paying you a dividend of 31 cents per share. You own 1,000 shares. Ladies and gentlemen, that comes to $310 per quarter. Now, quarter is 3 months. Every 3 months, they pay you $310. Multiply that times 4 because there's 4 quarters in a year. So in 1 year's time, Arbor Realty pays you $1,240 in dividend payments. Let that sink in. In a year's time, by owning 1,000 shares, you could make $1,240 in dividends. Now, like I always do, I'm going to go to the chart. I don't do anything without checking this chart. First thing that sticks out to me in this chart, simply put, is you notice here, price goes up, price retraces, rests right here on this trend line. I see that Arbor Realty is in an upward trend. See how this price started out around $4 a share, held this trend line, went up, down, tested the trend line, and right now it looks like a perfect time to get invested in Arbor Realty because it's right at the lowest point, but yet still within the trend line. And normally when this happens, ladies and gentlemen, I've seen this 100 times before. Normally when this happens like that, as long as this stock does not drop far below this teal line, I guess it's teal, let's call it cyan, this cyan line right here, that's a support line. See how the price comes down to that line and then it goes higher, comes down to that line and goes higher. If it does not drop far below that line, this thing is going up. And I'm looking right here, the price of Arbor is $11.89 as of today. It has a price target of $11.40. So Arbor Realty is in position where it has an opportunity to set new highs. The highest price it's traded was $15.77. It's trading at $11.89 right now. Now, I believe within the next year, this price is going to try to retrace back to where it came from. Now, we're in the middle of this pandemic, which started back here. As you can see, right here, the early part to the middle of March, that's when everything pretty much is going down because of the pandemic. So stocks usually try to retrace or go back to where they traded from before a major move down occurred. Now, if you look right here, back at the end of February, Arbor Realty was trading over $14 and as high as $15 a share in the beginning to the middle of February. Right now, it's trading at $11.89 per share. So I would almost bet you, because I've seen this 100 times before, this stock is going to eventually try to get back to that $14 to $15 range. Now, this is a perfect time to buy this because real estate is sort of down right now, but it's starting to rise. So a lot of you that want to try to buy low and sell high, here's your chance. Check out Arbor Realty. And by the way, while you waiting on this to rebound and to go higher, it's paying you 10.43% dividend. You can't beat it. So grab you some shares of Arbor Realty Trust. I got mine. Now you get yours. Once again, if you have not done so by now, I ask that you please hit that subscribe button on the bottom of the page. Turn on your notification bell and leave your boy a comment and let me know which one of these 3 investments do you prefer. Moving right along to the second investment. This one goes by the name of Blackstone Mortgage Trust Incorporated. Now, I'm going to go back to Yahoo Finance and I'm going to type in the ticker symbol for Blackstone Mortgage Trust. There it is right there. And I'm going to tell you a little bit about this company and what they are all about. In the description on Yahoo Finance, it says that Blackstone Mortgage Trust Incorporated is a real estate finance company. Originates senior loans collateralized by commercial properties in North America, Europe, and Australia. It says the company operates as a real estate investment trust for federal income tax purposes. As I said before with Arbor, as Arbor is a REIT, a real estate investment trust, so is Blackstone Mortgage Trust. So once again, just to drive that point home, real estate investment trusts are mandated by the federal government to pay you as an investor, to pay me as an investor 90% of what they earn as a company each year. That way they can avoid business taxes and you and I can stack those dividend payments. So looking at Blackstone Mortgage Trust, I'm looking at my notes and my notes say that they are based out of New York, founded in 1966. So this company is not brand new. They've been around for a minute. Now I'm gonna go back to the dividend channel and we're gonna look at their dividend history. see what those dividend payments look like according to their history. Now, they started paying their dividend. They paid one dividend in 1995. Then they consistently started, it looks like, in the year 2003, early part of the year, March. And it looks like they have continued to pay their dividend up to the latest dividend that was paid the end of September the 29th. They paid a dividend of 62 cents per share. They also rated a buy. And the dividend yield is listed at over 11%. So the last dividend payment was 62 cents per share. And once again, just to give you an idea, let's say you own 1,000 shares of Blackstone Mortgage Trust, and they pay you 62 cents per share. Ladies and gentlemen, every quarter, in other words, every 3 months, they drop in your account $620. That's how much that 62 cents per share dividend will equal with 1,000 shares. Now, I know a lot of you are saying, well, the price, stock dude, is $22.44. See it? Per share. And you saying, if I had 1,000 shares, where would I get over $22,000? Stock dude, I ain't got that kind of money. I would say to you, if you have a 401k, if you are a grown man or a grown woman and you have been saving for retirement, I would say to you, I bet you that you got at least $22,000 in your retirement fund. I bet you do. But one thing I can tell you for sure, this right here is paying over 11% dividend yield. I hate to tell you, I don't want to bust your bubble, but your IRA, your 401k, wherever you have it, I guarantee you, they're not paying you 11% on your money in a year. This ain't what I heard. This is what I know. I do this stuff every day. Before I left my job, I checked out a lot of stuff from my own 401k. And what I decided to do, I pulled my money out of my 401k because the balance kept doing this, up and down, up and down, up and down, up and down. And I said to myself one day, I said, man, if anybody gonna lose my money, it's gonna be me. Now, I don't set out to lose money, but I trust me with my money more than I trust anybody else. And I looked at the performance that my fund was getting for my 401k. It ain't nothing like this. It ain't nothing like that. Now, the dividend payment for Blackstone Mortgage Trust from 2013, let us go here and see. 2013, it was 27 cents. And it went to 45 cents. 2014, it went to 48 cents. Then to 50 cents. 2015, it went to 52 cents. Since 2013, Blackstone Mortgage Trust, the REIT, the payment has been rising. Starting out at 27 cents, in 7 years, it has risen to 2020 level of 62 cents. Now think about this. For the past 7 years, they have been increasing the size of their dividend payment. Now, if they've been doing it for the past 7 years, it's a good chance, as long as business continues to thrive and get better, that they may continue that in the future. So let's just say 10 years from now, who knows? Auburn may be paying you 75, 80 cents per share. It may continue to rise. Now, I also noticed something else. I'm looking at my notes to make sure I didn't forget to tell you guys. Look at this right here. December 2006. In December of 2006, you see this right here? This is a $14 special dividend payment. Let that sink in. $14 per share that they paid as a special dividend payment. If you owned 1,000 shares and they pay you $14 per share as a special dividend payment, ladies and gentlemen, boys and girls, that would have dropped $14,000 in your bank account. Good Lord, I wish I would have known about it back then. And as you see right here, in 2007, they did the same thing. They paid a $27 a share special dividend payment in December of 07. They did the same thing, paid a $20 special dividend in December 2012. Now, that was the last time that they paid it, 8 years ago almost. But if they did it before, and if business continues to pick up, who knows, they may decide to bless you if you own shares with another huge special dividend payment in the month of December. I don't know about you, but I wouldn't want to miss that. Maybe you should get your shares now and hold them just in case. So once again, before the pandemic hit, the stock price of Blackstone was over. Pandemic hit right here in the beginning of March. The price of Blackstone was $40 plus a share. And like I always said, when stocks fall, they usually, once they rebound, they try to get back to where they fell from. So right here at the end of February, early March, stock price was right around $40. And if you notice now, the stock price for Blackstone Mortgage Trust is only $22.44. Now, just to give you a tip from looking at this stock chart, I would say that the nearest support level that this stock will probably try to retrace to will be right around $20 per share. I believe that eventually this is going to hit some resistance in this area. The next couple of dollars higher, it'll hit resistance, and I think this thing is going to fall somewhere around $19, $20 a share. So if I were you, I would put this on my watch list, and I would hang on to it for the next maybe month or so and watch it. And think about it, the next few months, you can get your money together and you can grab you some. And right here, it's paying over 11% dividend. So even if you buy, and it does tend to go down, you know, at the end of the year, but even if you buy now and it goes down, you can collect that dividend of 11% while you wait for it to rebound. And right now they have a price target of $27.17. The price right now is $22.44. So we have some upside potential. If you can get this around $20 and it goes back to $20 and $27 and up to maybe $40, you're looking at a 25-30% gain on top of a juicy dividend while you wait. So that's the second investment opportunity that the stock dude is bringing to you, Blackstone. Now, this third real estate trust, it goes by the name of Realty Income Corporation. Now, this one right here pays a monthly dividend. The other two pay quarterly, which is every 3 months. But this one right here, this is the Cadillac of the dividend paying company. This is a Dividend Aristocrat. Aristocrat stock. It pays every month. This is the Cadillac. The other two are nice. They real nice. But this one right here is a monthly dividend payer by the name of Realty Income Incorporated. Now, this company is known as the Monthly Dividend Company. That's what they do. Now, they are located in San Diego, California, and they went public back in 1994. Number one of the most reliable dividend companies out there. Now, this would be a perfect investment if you are an older person like myself. You can put some shares of this away for your kids, man. It's all about the kids. If you have a 10-year-old, 15-year-old, even a 20-year-old young adult, you can put some of this stock away and leave it to them, like I do with my kids. Put something away and let it grow, because they're paying a 4.6% dividend. And they're also paying it every month. Now I'm going to go back to the dividend channel and we're going to see what their payment looks like. Dividend Aristocrat. S&P Aristocrat. In other words, in order to be an aristocrat, that means as far as them dividend payments go, they don't really miss them. Now, if you look right here, they're rated a buy as well. They are paying 23 cents per share every single month. And once again, now this is more pricey. Once again, this is a Cadillac. Cadillacs ain't cheap now. This is going for $60.75 a share, but they are paying you 23 cents per share. And if you notice, let's see what they started with. Man, they've been paying a dividend for a long time. Look how long the dividend history is. Their dividend started in October of 1994. They were paying 7 cents per share in October 1994. And here we are, way up the list, all the way to as recently as September the 30th, 2020. They paid 23 cents per share. So the dividend has been steadily rising. So once again, if this is something that you possibly want to leave to your kids, you can enroll in your dividend reinvestment plan, which is known as a DRIP, D-R-I-P, dividend reinvestment program. And you can let those stocks accumulate, because instead of paying cash, if you invested in a DRIP program, a dividend reinvestment program, that instead of being a cash payment, they will buy you additional shares of stock. And it's almost like I always say, it's like your stocks will be having babies, because you can buy 100 shares and let this sit in an account and let it rise time over time. They're paying dividends and they're adding shares to your shares. So let's say you can only afford 100 shares. But if you let this ride in an account for 10, 15, 20 years and leave it for your kids and have it set up as to where you're getting paid in shares, by the time your 15-year-old get to be 60, you, just for buying 100 shares, you may have accumulated 200 or 300 additional shares by being set up in a dividend reinvestment thing. So that right there can be stacked and keep stacking them. And you can have a nice investment to leave for your kids, because everybody know the kids are the future. And if the kids ain't got no money, guess what? It ain't no future. I'm the one known as the stock dude, and I hope that you enjoyed what you heard. If you enjoyed the content, I ask, if you haven't done so yet, please hit that subscribe button on the bottom of the page, man. Leave me a comment and let me know which one of these 3 investments, real estate investment trusts, that you like. Once again, if you could be invested in real estate without being a landlord, would you want to do that? If you would, I just gave you 3 ways of how to get that done. I'm the one known as a stock dude, and I'll holler at you later. Peace.